What's going on, team, and welcome back to another video. In this video I'm going to be going over the ICT Unicorn model and give y'all a couple of tips on how you can be more profitable with this model, because for the last month or so I have been utilizing the ICT Unicorn model a lot and I have had an amazing win streak, and I'm going to help you become more profitable with the ICT Unicorn model with these tips. So we're going to be looking at a few trades that I placed this week and last week, so let's get right into it. So this is essentially what the ICT Unicorn model is. You want to wait for a breaker block to form, and the way that a breaker block forms is that we have a candle closer below the previous swing low, and the previous swing high was taken out before we closed below that swing low. We close above this swing high, then we close below this swing low, creating a breaker block. Then the last down close candle here is your breaker block. So that would be something like this. And then you want a fair value gap on this side to overlap with the breaker block. So you have a breaker block overlapping with a fair value gap. That is essentially what the unicorn model is. Let me show you a few examples of an actual chart so you can understand exactly what I mean. Now, for example here, this is where a lot of people will mess up, right? A lot of people will look at any swing high and call that the breaker block. So right here, this would be a breaker block, bullish breaker. But then again, this one would also be a bullish breaker. So which one do you use? In my opinion, because this breaker block is overlapping with two fair value gaps, this is the one you should be using. Now down here, if you want to catch the move at the bottom, you can absolutely use the swing high. In my opinion, they both work fine. In my opinion, you can have multiple breaker blocks in a leg. Now, I do look at breaker blocks a little bit different than other people, but I do have a very high win rate using these breaker blocks. So this is just the first example. This is a swing high, and it is an up close candle, and it overlaps with this fair value gap, and it overlaps with this fair value gap. And what I usually do, I know a lot of people when they trade the unicorn, they base their entry off of the fair value gap. So their entry would look like this, right? Their entry would be the top of the fair value gap. My entry is always the breaker block inside the gap. So here and not here. Again, right here we have a great example. First breaker, in my opinion, we have a bullish swing high here. If I want to catch this move early, I can take this, right? That would have played out perfectly. We get a candle closure with displacement above the previous up close swing high. Then we come down, retest that, and then move higher, right? But the safer option will be this one. Obvious up close swing high right here, right? That overlaps with a fair value gap right here, right? We have that breaker that overlaps with this gap. And again, this would have been my entry, right? Something like this. I am not going to base my entry off of the gap here, right? I'm gonna base it off of the breaker or the wick here, right? That just often gives a way better RR, and sometimes you are gonna get left behind where prices rallies without you. 99% of the time, this is the better option. And I also think the reason that a lot of people are failing with this model is because they are getting their drawn liquidity wrong. You will not find any model really working well if your drawn liquidity is not right, because I would say that unicorn models probably have an 80 to 90% win rate if you are executing within the proper drawn liquidity. You cannot just be trading any unicorn model you see. You come into the day, and if you're bullish and you're confident that we have higher prices, you wait for a bullish unicorn to form, okay? For example, right here, we have a perfect bearish unicorn. We have a down close candle, swing low, that overlaps with a fair value gap here, but that fails very bad, right? Why is that? Well, the drawn liquidity is obviously higher here, right? We've had a very bullish price action for the last couple of days. We just took out sell side liquidity, right? That failed. Here again, we have a nice unicorn. You can either draw it from this swing high or this swing high. They both overlap with this fair value gap here. So in my opinion, it doesn't really matter which one you use. For better RR, you can use this one. Now, a lot of people will probably disagree with me here, but this works perfectly fine for me. So had you used this last one, right? We have that fair value gap right here, or volume imbalance, whatever you want to call it. And that was extremely clean, right? And again, my entry would have been down here and not up here. And then another example will be right here. where we have a swing high here, right? We have an up close swing high here that overlaps with a gap here. But when I see price rally like this and I don't expect a retracement and we get another up close swing high here that also overlaps with a gap like this, that is when I'll take that one instead. But I have to be extremely confident about the drawn liquidity, because if that is wrong, this is not expected to hold, right? Also because we have a lot of bearish gaps out here, and if my drawn liquidity is wrong, these bearish gaps will probably hold. So if we had a bearish bias coming into this day, I could expect bearish gaps to hold and bullish gaps to fail. But if my bullish bias is correct, I could expect bearish gaps to fail and bullish gaps to hold. And that is where a lot of people get it wrong, and that is why I get DMs saying that the unicorn model is not worth it and it does not work. That is simply because people are getting their drawn liquidity wrong, and then any model won't work. This is an example of one I took pre-market, and basically we had a nice sweep of this high and a failure to displace above that high, and overall drawn liquidity for this day was bearish. I called that out on my Twitter too and explained why. So we have a down close swing low here and we have a down close swing low here, right? These both overlap with this small gap here. We've just had a liquidity sweep and my overall bias is bearish, right? So that is going to be my entry right there, and stop will go above. We're at the conditional encroachment of this wick here, and then a 1 to 2, and this is what it looked like. Right, very, very beautiful. And the reason that this works is because the drawn liquidity was correct. So what you got to do is just be patient, wait for a bullish liquidity sweep. If you are bearish, meaning that we take out a high and then form a breaker block with an overlapping fair value gap on the way down, right? The reason people are getting screwed is because they are impatient. Another example here is the same day pre-market, bearish bias, right? We have a down close swing low here, and that overlaps with this fair value gap here. And if my drawn liquidity is right, this should work, and stop goes here, target the lower resistance liquidity down here, and let's see. Perfect, right? We were holding this gap very nicely, and my entry is again going to be that down closed wick and not the beginning of the fair value gap to just give me better RR and better stop placement. This was another play that I took, and right here we have an up closed swing high. This is not an up close swing high, right? That is a down close swing high, and that is not what I want to look for when I look for a bullish unicorn model. If this was an up close candle, then yes, this would have been very nice, but because it is down closed, that has nothing to do with our model, right? So this up close swing high overlaps with this fair value gap, and then what I did was I combined this with the optimal trade entry like this, and that was very, very accurate, right? And then my entry again was here, stop at the low and then profit at the high here. So let's see, very, very precise, right to the tick. And the reason I believe that this was so precise is because it aligned sort of with the optimal trade entry. So you can use that as kind of a confluence to get sniper entries. A lot of people ask me how you get entries like this, and one way to do it is to use the optimal trade entry. The 0.618 level is extremely good for entries like this, and I also have a video of this exact trade on my Twitter if you do not believe that I actually placed it. Very, very beautiful example here again. We have an obvious up close swing high here, then we have a lot of bullish displacement and a failure to go lower here, right? We failed to displace lower and we successfully displaced higher. And then we have this beautiful up close candle. Now notice how this doesn't exactly overlap with this gap, but when it's this close, I'm fine with that, right? It doesn't need to just directly overlap with a gap. This is just fine if you ask me, if your drawn liquidity is right. And then you can use the conditional encroachment of this gap as your stop loss, and then target the low resistance liquidity sitting here, right? We have equal highs here, here, and here. So a lot of buy side liquidity there. and we would be filled on this very candle, and the trade would have played out perfectly, right? Now keep in mind that this is hindsight. It's not going to look like this all the time, but if you get your drawn liquidity right, probably at an 80 to 90% win rate. Another example would be this one right here. The reason why I was buying this low is because we had a higher time frame SMT with the S&P 500 here, so I was really expecting this to be low a day. And then we had a 5-minute up close swing high here that overlapped with this 5-minute gap here. So the trade looked like this: stop at the constant encroachment of that wick, and then target would be the constant encroachment of this wick. Now the reason all these plays are working out is because my drawn liquidity is correct, right? Had I came in with the wrong bias of these days and taken, let's say, bearish unicorn plays on a bullish day, then that win rate probably goes from an 80 to 90% win rate to probably a 20% win rate, right? So it all comes down to just knowing where price is most likely going to go, and then it doesn't really matter what PD array you're using, because ideally any PD array should hold if we are bullish, right? So if we're bullish and we're truly bullish gap should hold, bullish order block should hold, bullish unicorn should hold, bullish breakers should hold, anything should hold, right? A model is really just an accelerator to get you towards drawn liquidity. So it doesn't really matter what you're using. You could be using just a normal fair gap, right? But of course, some people like to have higher win rates. And of course, the more confluences you have, the better it's going to be. And when you have a breaker block that overlaps with a fair gap, that's 2 confluences already. And the more you can add, the better. In this case, this is also an order block, right? So 3 here, right? The more confluences you can add, the better. Another thing that I would look for to increase the win rate is that what are we delivering from? That would be this 5-minute gap here, right? Beautiful delivery off of that. And then we also just violated this bearish 5-minute gap, right? So we're holding a bullish gap and violating a bearish one, and then we create a unicorn model to the upside. That is a clear indication that the order flow is bullish and that this unicorn should hold, right? Because if this bearish gap is holding this nicely, we have a higher time frame SMT here. We are violating this gap. There's no reason for me to believe that this gap is not going to hold. This was another beautiful play that I took. Actually, ICT took this very same trade. And what happened was we got the 9:30 New York Stock Exchange opening bell that sent us higher. And typically that is a Judas swing, right? A manipulation move. Takes out buy side liquidity here. Then we get that displacement leg lower. We have a swing low here, right? That overlaps with this fair gap here. Now, a lot of people ask me, well, this is an up close candle and this is a down close play, right? Well, what I do then is I take the very next down close candle. So for example, in this case, we have a down close candle here that even though it isn't a swing low, it's still a down close candle. And that also overlaps with this gap. And we have an inversion fair gap set up here. So we have a lot of plays here, right? Again, another fair gap here. So kind of the 2022 model. So we have a lot of overlapping models, and we have a confident drawn liquidity, which is this low here. Why? Because of that 9:30 Judas swing to the upside. And that is essentially why I placed this trade. And a lot of people will even call this a valid bearish breaker, even though it is an up close candle. And you know, that's just personal preference. It can work, absolutely, but for high probability, I would only, if you're going for a down close unicorn plays, I would wait for a down close swing low and not take an up close swing low like this. But because we were overlapping with an inversion fair gap model, a 2022 model, and we had order blocks right here, right? So a lot of overlapping models, and that's another way to increase the win rate of your existing model, is to wait until it overlaps with other models. And that was basically it for this video. I just got a ton of questions asking if I could do another video on the unicorn model, because a lot of people are struggling with that very model. It is not very hard. You just have to get your drawn liquidity right more times than not, and you'll be profitable. It doesn't really matter what PD array you're using to get there, right? It's just the accelerators for you to get towards that drawn liquidity. But this is a great model once you get it down. And this is exactly what I do. A lot of the trades we just looked at are trades that I actually placed. So yeah, I hope you enjoyed. I hope you learned a thing or two, and I will see you in my next video.